So now we are going straight down into business. Now, we have talked about a bullish character and a bearish character, right? We discussed the bullish character, a bearish character. We discussed the bullish phase, the bearish phase, and we also discussed a consolidation phase, which is this. So now we are going to ride in an uptrend and see how market reverses. Now, I'm not going to discuss waves with you because market stretches in waves. And there's a number of waves the market must have stretched that it's going to then be exhausted and be due for a reversal. That is, if the market is going to an uptrend where the buyers step in to say, you guys have overbought, it is now time for us to sell. How do you now know your trend is about to reverse? So you don't keep buying in an uptrend when a trend is about to reverse. I am taking you down there. Now, let's say we start seeing series of higher, low, higher, low, higher, lows. Now, what makes this character a valid one and a bullish character is because when this wave starts, wave one, this is wave one, okay? This is wave one, and this is wave two. Now, this is the origin of wave one, okay? This is the high of wave one. Then this is wave two, and this is the low. So this is the high, low, high, low, high, and low. So you've understood that we are going to move further. When you see series of this, the market is in an uptrend. That is to say, the market is in a bullish phase. But now, when this market stretches in this, yeah, this is only AliFX, and I'm quickly going to discuss some market phases and trend line for my beginners, just in case, so you would know what you have to see in a chart. Over to the market phases. So we are going to be dealing with a bullish market phase. For you to confirm a market phase, you first need to see a character. Now, a bullish character, this is a bullish character. When you see a higher low, a higher low, higher low. Now, this is a bullish character. Okay? Now, this is our origin of our high. Take note. This is our first high. This is our low. This is our second high. And this is our second low. Now, this is wave 1, wave 2, wave 3, wave 4, and so on and so forth. The market stretches in waves. Now, this is a bullish character. Series of higher highs and higher lows makes up a bullish structure. Series of higher highs and higher lows makes up a bullish structure. As I said, we have three phases of the market, of which we have the bullish phase, we have the bearish phase for the sellers, and we have the consolidation phase, whereby the buyers and sellers have equal rights. The bullish phase, which is an uptrend we are dealing with, is for the buyers. So now, how do we know when a trend is about to reverse? So we do not buy when we ought to be selling. Firstly, you have to know what's the current trend of the market. How do you determine that? You have to look out for your higher highs, higher lows, or you look out for your lower highs, lower highs. Okay? Now, this is a bearish phase of the market. This is a bearish phase of the market. While lastly, we have the consolidation phase, where both the buyers and sellers are given equal rights. We call it a consolidation phase or a ranging market, where we have equal highs and equal lows. Okay, where we have equal highs and relatively equal lows. It's a consolidation market. Now this is a bullish phase, a bearish phase, and a ranging or consolidation market. Now this is what happens if you are observing a trend, if you are following a trend. Wave 1, wave 2, this is the low. The low of this wave must not come to the origin of wave 1. That is, to make this character a valid one, this wave must not come down to the origin of wave 1. Okay, that's what makes this character a bullish character and a valid bullish character. So now let me take it back to where it was before. Now when you see a market printing higher highs or higher lows, let me give an example of higher highs. Higher highs is when you do not even have a low to interrupt the trend. My diagram. So this is more or less like a higher high. Okay, there is no low. This is a higher high. So in the case of a lower low, it's inverse. You can turn this the other way around. It's a lower low. So when we have higher lows, this is wave 1, wave 2, wave 3, wave 4. Now the low of wave 4 must not come to the origin of wave 3, which is the low of wave 2. This must not happen, because when this happens, then this character has been changed. We now call it, that is when you now hear a change of character. So it will be either to the upside or to the downside. We now have a bearish CHOCH or a bullish CHOCH. But in this case, we are talking about a bearish CHOCH because the character is changing to the downside. So when this happens, the character has now changed. The market is then going to retest the other block that caused this breakout. You will know what that means when it's time. And then begins to print series of lower highs, and it comes to take out where this origin of wave 1 started, which is here. You now say the market has broken structure, because of course it has broken this bullish structure that had series of bullish characters of higher highs and higher lows. So when this happens, a character changes. We look for and we see series of lower highs and lower lows. We no longer look for buys because the market has reversed to the downside. We now look for sells and ride down. That is what we now call a break of structure to the downside. Now let me delete this consolidation phase I drew here. Now you will now see something of this kind. Now let me take you to the charts right away. Now this was coming from the downside. Okay, we had lower lows, lower high, lower high, lower high, lower high, until this high came to take out the origin of the other high. It has taken out this previous high. This is the high that has taken out this high, telling us there is now a bullish change of character to the upside. Okay, and then we started having higher highs, higher lows, higher highs and higher lows. Then it broke this structure